How is everyone today? So let's get the party started and kicked off here. Um, Let me share my screen and then we're going to rock and roll. Okay, guys, welcome to our Thursday session. We had a last minute cancellation. I'm going to just like do it by myself. And I thought we're like in April, mid of April, and I want to talk today a little bit about, you know, what's going on in the land world, right? Because I think land still works, but the real problem, a lot of people, and I've preached that multiple times, still run a 2026 business with a 2021 playbook. So let's talk a little bit about this, right? So the hard truth is that what you see probably on Facebook, on Instagram, all these people posting checks and all this, and hey, I'm crushing it. And the reality is it's not as many anymore. It was like 3-4 years ago. But also the reality is like it's not land that stopped working. It's the reality that a lot of operators I see out there are working with a playbook that is just like totally outdated. And I want to stack a little bit for the reasons today on why that is. And I also want to walk you a little bit through the solutions on this, that you understand what you need to do in this current market, in the current situation, in the current state of the business, how you can do this, right? So let me what is going here? What changed really when I'm talking about this, right? The land investing landscape has drastically like transformed over the past 5 years, and there's so many things why that is, right? Like in 2021, like like when I started this in 2020, you sent like 2,000 blind offers and you had like a deal falling into your lap. You listed it, sold it in a couple of weeks, made 10, 15, $20,000, and you were good, right? Then what happened? It became more and more popular. In 2022, 2023, we had more and more competition entering the market, right? And suddenly our response rates went down. So everyone was doing direct mail at that point. Some were doing a little bit of cold calling and texting. But the direct mail cost like spiked, the response rate dropped, and the easy money dried up, right? And when you then go a little bit further down, 2024, you saw a lot of the hobbyists quitting, right? There were forums full. I've seen it, like, and I got almost discouraged by that too. It's like, oh, land is that, right? And a lot of people just were swamped out the industries. Interestingly enough, you see a lot of people coming into that industry right now too, through the amount of land coaches we have out there that teach you how to flip land. And most of them, and not all of them, but a lot of them are teaching still this old playbooks. And then people are starting to doing deals in the hottest counties ever. I was like on with somebody the other day. They sent like, I think 5,000 postcards in one of the hottest counties in Florida. It's got over 500 offer requests, 500 hand raisers. They sent 150 offers and got 12 lots under contract. And that's amazing, right? That's an amazing response rate, an amazing like thing rate. But then I asked them, what do you make on each deal? It was $2,000. That's what the old playbook is. When you make $2,000 on the deal, you brought money to the table, because just alone getting these deals, when you write 150 offers with buying the data, sending the mailers and all that, plus writing 150 offers when you're at Houston, when you don't have a system, that's probably like half an hour on each time. That's at 85 hours just like comping deals. Not like talking about calling the sellers back, doing this, doing that. When the contracts are there, contacting realtors, buyers, like going through title and so on, right? And this is just like one of so many stories I've heard in the last couple of years, where people now do this old playbook and they just don't get successful because they don't get profitable. In the same time, when you look around, there's a bunch of operators who have adapted, right? And some of them have the best year ever, right? I talked with a friend of mine the other day. He said 2025 was the best year he ever had, right? And the reason for this is the game didn't end the game evolved, right? I think when you look in the real estate market overall, it's still the highest margin game available in the land space, right? It's still, when you compare it to other, like, when you talk to house wholesalers, like when somebody like gets on the tax delinquent list, they get suddenly 50 calls. So you're competing with 50 people over one house, right? And the best one will come through. Like, break it down, like here you're maybe competing with 3 or 4 people on the same asset, right? So like compared to other operations, it's just still a low competition play here, right? That's available to any regular person, right? And I also think the fundamentals haven't changed, right? It's still buy low, sell for more. This is our business model, and do that over and over and over again. This is the core business model of land investing. But how you do it, the tactic how you do it, right, has changed. And most of the people didn't adapt to that, right? And most of the people that are saying land doesn't work, they do one thing. They send out some mailers. They send out, I don't know, 2,000 mailers to 1,000 calls and say it doesn't work. Because that, what they get taught, didn't work. They realize how much work it is, right? And, when I really look at this, when you were playing the old game, it was like, hey, we send 2,000 letters, wait and hope. But the new game is you really need to build a business that works, right? And that's a little bit also like my story, right? I paid a really extensive tuition to figure this out. I'm doing this for 6 years now, right? And I started where you started. I had no unfair advantage. If you wanted, I had more disadvantages. I came from Germany. I had never been in the US. I was hardly speaking the language. I didn't know what a warranty deed is. I didn't know what a title company is. I didn't know, like, what is the difference between a realtor and a broker, right? So I couldn't open bank accounts. Like, it was like I had probably like more hurdles than you to just like start the same thing where you are starting today, right? And guys, on the way, I made all the expensive mistakes. I took lots down that I shouldn't have taken down because I thought they are more worse than they were, and I didn't make my homework. I spent so much money to get into markets that were never was. Actually, one of my favorite stories is, I'm a contrarian. And when I got involved in this, I asked my coach, where's everyone doing deals? And he said in Florida. And I said, okay, what's the furthest away from Florida? It's, of course, Alaska and Hawaii. I thought, okay, that's a little bit too much. I started in Washington State. And, I sent like probably $30,000 worth of mail to Washington State and needed a year to get my first deal done, right? Why? Because I had just one single exit strategy. Even in that moment where I converted that a little bit, I made a lot of mistakes in underwriting, and there were real losses and real lessons, right? But then what really brought me to the finish line was building a system with people, with technology, and all that. Developing multi-channel, multi-exit frameworks that changed everything, right? Because this is what you need to do today, and I'm going to walk you through that in a little bit, what that means, right? And the 3 things that are actually working right now and that are super important to succeed is that you are much, much tougher in your selection where you go. This is like the first key to get deals done, to get lead flow rolling, because it's one of the major hiccups I see from operators when we talk to them. It's like, I don't have lead flow. And the key today to lead flow are these 3 things. It's market selection. You need to have good data, and then you need to do omni-channel outreach, right? So how do I mean that? Yesterday, we made an entire AI session. How can you utilize AI and tools that are available today, like Land Insights or the Land Portal, to evaluate if a market is a good market? And we just talked really about, like, this method to say, I go to Putnam County, Florida, and send everyone in Putnam County, Florida, a piece of letter. Let's say in Putnam County, Florida, are 10,000 people that own property, right? what will happen is from this 10,000 people, probably, or 10,000 lots, probably 7,000 lots are deals you never want to touch because they're in wetlands, they're in flood zones, they have gophers on them, like whatever it is, right? Which is, by the way, a big business in Florida. That's what I learned yesterday. But they have all these problems with the properties. So, like, actually, you're sending 10,000 letters, and 7,000 of those just are like things you anyway never want to do, right? So, like, now you have 3,000 people left, and what we do is we send them one letter. How shall that be successful? And guess what? The people that reach out to you are probably out of the 7,000 where deals in there that you never ever want to do, if that makes sense, right? Like it's like $5,000 lots. Half of them are wetlands. They don't really have road access. When you go today and pick markets, you want to look at certain things, right? You want to make sure that there's velocity in the market. You want to see, are there buyers and sellers? Are properties actually moving, right? Like when you see it, like somewhere there's 20 lots listed and there were 2 sales in the last 12 months, you don't want to go there because it doesn't make sense, because obviously everyone wants to sell and nobody wants to buy. Stay away from those, right? So when you then you see inflated pricing, right? That's most of the time the thing too, that when realtors are the price demand driver here in our industry, if that makes sense. So and they list everything high. Why? Because their commission gets higher when they list high, and they don't care if the lot sells or not because they don't put any effort in that most of the time too. When you look at most of the listings out there, right, the listings look like, oh my God, somebody made a screenshot from the county assessor website, right? There's no real effort that goes in there, and then they charge premium prices, right? It's like trying to sell a Fiat for price of a Ferrari, right? And that never works. So when you select your markets, really look into it. How many buyers are there? How many sellers are there? How fast is things selling? It doesn't bring you anything when you have sell-through rates, stuff is selling. But when the average turnaround time is like 320 days on a listing, you probably don't want to go there in our space, right? When you look at also, like when you select markets, select after outcome. When what you're targeting, you want to have like a median price that makes sense. And I can tell you what, we need to do more in these days. We need to do more outreach. We need to build more operations. We have more work with moving this deal. So doing a $20,000 deal with an $8,000 spread, if you don't have a rock solid system that like is effortlessly, probably you want to better look in like a $60,000 deal with a $30,000 profit, if that makes sense, right? So be intentional when you select your markets also with your business goals, because I think it's the easier way to do like 12 deals a year that make you $25,000 or $30,000 each than doing 80 deals that make you $5,000 each, if that makes sense. Right, so you want to be really intentional when you select the markets, and before you select the markets, also have clearance about what is my business model, right? Like, what do I want to do? And I'm going to come into that, because today, like, people decide I'm just a wholesaler, I'm just this, and that doesn't work anymore. You need to prepare as a business to have different exit strategies. I come to that in a little bit. What are the exit strategies? Oh my God, what is he talking about? So what I want to say is really look into, when you select markets, where do I go, right? And then make sure that you have really good data, right? We work with a company called Teradata to make sure of that. Don't pull your lists from anywhere. All this big list provide, go to a specialized platform like the Land Portal or Land Insights. They have really good land data in there. In skip tracing, check the market, what you can do with skip tracing. There's tremendous quality differences how you skip trace. And you would agree on me, like when we go to Putnam County, to our example again, we have now 10,000 landowners. we sort 7,000 out because the lots are not that what we want, right? You also want to probably select by lot size. It's most of the time the lot size that determines, like, is this market working or not, right? In Putnam County, maybe the 1 to 2 acre lots are working really well. The 2 to 10 acre, not at all, but the 10 to 20 acre are perfect because there's buyers and sellers and the prices are good, the velocity is good and all that. So this is what I mean. But now let's go back to Putnam County when we talk about good data. When you just work with 3,000 people out of your $10,000 list, do you think it matters when you skip trades, get data back, you not lose 40% on those people, right? And even if you hit 100%, it's always about how good are the phone numbers in that list. So do your research on where you get your data from. Question that a little bit. How do they source it? Like, where do they get their initial data from? Because like every list is as good as where it comes from and when it was updated, right? And then last but not least, when I look at the people that are really driving massive business right now, they all do omni-channel outreach. What I hear over and over again is, oh yeah, I'm just doing mailers only. I'm just doing texting. I'm just doing calls. But the reality is, when you're doing calls or texts only and like do just a letter every once in a while to somebody, or just like sending one time a letter, you don't really like go into your market. What you do is you just like penetrate and scratch the market on the surface, right? So when you really want to run a serious operation today, there's 3,000 people in Putnam County, you want to call them, you want to text them, you want to send letters to them, postcards. You want to maybe do some Facebook advertising or geofencing or whatever you can. Maybe you want to do a TV ad or like a radio ad, whatever. But what do you think, who will be more successful? Me doing all of these things, or that person that sends one single letter, that does one single phone call? Who will be more successful? And this is what I mean. Like, you need to really think that you need to have multiple channels to reach that and then work it over a period of time, right? And to give you a little bit of an idea of sample sizes, when you really want to start this business in 2026, you can't send 500 letters anymore to determine for yourself what if this business is working or not, right? Because in the very end, what you need to make sure is that you at least send 15, 20,000, that you attack 15, 20,000 records in like multiple angles to see, can I get a result out of that, to determine, is that something I want to do and can do and build really a sustainable business out of, if that makes sense. So do more and do the right things. Use all the technology that is out there today to help you with what you are doing, right? And most people aren't doing it. And this is why they don't get feet on the ground and start bitching land is not working. No, they're just like trying to run this operation as like a hobby on the side, as a side hustle. And that will no longer work. Let's talk about one other thing I see. There's a second secret of the super successful investors. And I was just listening to it. There was a great podcast this morning I listened to from Seth Williams. Shout out to you, dude. You bring good stuff together. It's like 6 other land investors. And he did a couple of those round tables in the past couple of months. And, you know, like when you listen to it, one of the things they all had in common were they all had different exit strategies with the seller. And all different exit strategies on the buyer side, because one ties into the other. Most operators, they go into there and they want to wholesale. And this is where you miss 60, 70, 80% of your deals. Because people, like, we have more competition, we have more newbies that all do the same pitch, right? Send in a 6 months contract and the people got burned, or they just don't want to do it. They don't want to lock their parcel up with somebody that has no skin in the game. What you really need to build is different exit strategies, how you approach a seller to find out how can I help this person? Because no person in the world will do a deal with you for the sake of doing a deal because you need a deal. They will do a deal with you when you somehow match their motivation and expectation level, right? So it's like when you really break it down, I was talking yesterday in our Land Autopilot group about that. There's three things why seller do a deal with you, and three things that we can solve, right? Like there's a lot of other things why they would do a deal, but there's three things we can solve. And one is price, one is time, and one is certainty, right? And what you really want to have is you want to have this exit strategies in your back pocket when you start talking about closing a deal, when you think the property makes sense and all that. You want to be able to make cash offers where you can close in 30 to 60 days. So what that means is you as a business need to have access to somehow kind of money to do so, right? And you need an underwriting engine and all that. But this is what the guys that are doing deals do, right? Like they have access to private money or other kind of deal funding. And now when you can close a deal in 30 days or in 60 days, how would that change your business? Like when you're looking this on a wholesale strategy, how many things do you lose because you need to go on a 3 to 6 months contract? And when you do a 3 months contract in the current really slow market, you're probably not going to sell it. And then you do all the work for nothing. So what you really need is you need a solid cash offer strategy where you're able and capable of deploying capital because you have access to private money. You have built this foundation, right? Second, you want to have owner financing as an exit strategy with your seller and also on the back end, right? Like when you sell it. Why is that so important? Because when you make an owner finance offer, you can probably offer your seller more, and you can give them, when they need certainty that you buy it and they want you to have some skin in the game, right? Then they will more likely do this than doing a double close, because that's the most pushback on a double close is you don't put any money in the deal, you just lock up my property. With an owner financing, you can overcome that. But you also need owner financing on the dispo back end, because depending on what deal type you're doing, maybe 80% of this deal type, right, especially when you do smaller lots with mobile homes and all that, people will buy on terms. And when you don't offer that, you lose 80% of your buyers, because not everyone can afford $40,000 cash to put a mobile home on there. But a lot of people can afford an $8,000 down payment and pay the rest on terms. So you kind of want to have the owner financing play on both sides of the equation as a strategy for yourself, because it builds wealth for you, and it also gives the opportunity to take more properties down because you control assets now with much less cash. Double closes. Guys, whoever I talk to that's doing that really successfully, that's doing a real double close play, goes on 6 months contracts and is super transparent of what they're doing. They open up that they will resell the property, right? That they're going to do it, because what it prevents is that sellers jump off, if that makes sense, right? When you're super transparent and somebody signs that contract, you buy yourself certainty that the seller is aware of everything that happens and that he stays on board with you because he knows, likes, and trusts you, right? And what you can do is here, you can get them also more money on a double close than when you buy a lot, because when you buy a lot, you need to be pretty conservative, right? You want to always, when you make cash offers, not lower than 60% LTV. Because interest rate will eat up all your profits and expose you to massive risk. And with double close, like your risk is super low, right? Like you maybe have a little EMD in there of $1,000, $500, whatever, but now you control is $30, $60, $100,000 asset, right? And what you definitely want to do on a double close, you need to have 6 months contracts, because the market is slow, right? When you work against a timeline, you get desperate, right? And you get disappointed. So better don't do a contract when you can't do 6 months than do a contract where you just have 3 months, because you'll freak out and moving that. It will distract you from everything. Our business is built around producing consistent lead flow on the intake, which you can do with omni-channel and good data. You will have consistent inflow, right? writing consistent contracts, and not every contract that you sign up will close. The fallout rate is roughly 50% no matter what strategy you do, because you realize somewhere in due diligence, when you dig deep, this is not an asset you want to own or want to move forward on, because there's any kinds of problems with that, right? Another exit strategy you really want to have in your thing is JV profit splits, right? Like, so what does it mean? The JV exit strategy with seller? Yeah, when you have bigger assets, 500,000, 800,000, $1 million. Do you want to raise $600,000 on a deal and have a liability of paying like $12,000 a month in interest rate, right? Like to your lender? No. But when you can bring your seller on board, right? Like on $1 million deal, when you say, you know, Musaf, yes, I see Musaf here, right? I see Jennifer here too, right? You say, hey, Jennifer, like, you know, how about this? I hear you want to sell the property. I hear you don't want to take anyone of my other offers. What about this? I'm going to give you $800,000 for your property, and I'm going to resell it because I'm a resale specialist and I know how to do that. You don't need to deal with anyone, and we split whatever we make more 50-50. What do you do? Right now, you control $1 million asset with maybe a little option fee, or for nothing when you have a good relationship. You help them, you help yourself, and you control $1 million asset and can probably make, when you do a 50-50 split, $80,000, $90,000 on that deal without ever owning that, with no risk exposure, right? But your seller gets more money, right? He gets certainty on the deal. He's just on a longer timeline, right? If that makes sense. And then last but not least, and this is where I see the mix up and hiccup happening, right? There's a lot of value add business models in our way, and you need to somehow play them, because you will get more deals done when the closer you can buy something on market value. That means you need these exit strategies. What do I mean by that? You need to know, you need to have the option to put a mobile home on there and sell a mobile home. You need the option to subdivide a property. You need the option to maybe entitle it, rezone it, whatever. Because when the numbers turn out well, you'll make market price and more. You can offer market price and more to the property, to your seller when you purchase it. But here's the thing. Try to do it with partners when you run a land flipping model. Why? Because partners that do subdivides and entitlements have a business setup for subdivides and entitlements, right? And I don't know if my friend Paul Costco is here. I don't want to call him out again, but like we talked yesterday about it, right? It's really when you suddenly take on a subdividing project and you don't know the heck what you're doing, you get distracted from your real business, which is flipping land and getting contracts in and moving them over, right? So what I would highly recommend you is, like, in your exit strategies, find partners that do that in the areas that you're working, that you can offload these deals to, that have the right frameworks, the right like operations, that have everything dialed in to do this kind of deals, which you can't right now. Don't try to bring everything under one roof. It's hard. You maybe can, when you have a great team, bring a minor subdivide in there. But even a minor subdivide is like, oh, we need to research the regulations in this county and in this city. And sometimes the city says you need to have water lines and this and this and this and this and this. You need a surveyor. You need to get the plat map filed and all that. Always stay in your core business model and in your lane, if that makes sense, right? So this is what I really wanted to share with you. Like, have good data, be in the market, like, and have these different exit strategies. And then let's go in the third secret when you're stuck in this market, right? This is the real killer's what operator stall, right? And what I always hear is, I don't have time or money. And analysis paralysis combined with this is the number one reason existing land investors aren't closing deals in 2026. When you are, and when you are one of those people that are sitting there and now it's not working for me and all that, then you haven't tried hard enough, or you haven't moved the right, like, levers to try harder. How do I mean this? First of all, what I see happening over and over again is over-analysis. People are analyzing everything to death, and I understand it. There's so many tools there in this world, so many things in this world that are available. Like, do I use Land Insights or the Land Portal, or do I text, or do I call, or do I mail? And when I do this, who do I use? And should I use the escape tracer or this one? Let me just research everything first. And suddenly what happens is you never get in motion, because there's too many options, too many tools, too many opinions. You listen to all these guys on the internet, right? Choose your lane. Bet on yourself. That's a mindset thing, right? Like, and this is what I mean. Like, when you really want to start act as like a business owner, what you really want to do is that you want to act like one. What does a business owner do? What does it even mean? What's Robin talking about? You need to take care that you have money for marketing. You wouldn't run a restaurant when you wouldn't have money to buy food and drinks that you can sell, right? You wouldn't open a restaurant when you don't have the money to get any kind of like utensils and plates. And okay, here in America, you do paper plates and paper utensils and all that, right? Like, that's a different thing. But you get what I mean, guys, right? It's like, you need to make sure that you have capital for your business, right? And not for yourself, for your business, right? And I talked about that in another thing, right? But the thing is that you need to have a capital solution in your business. You need to know, how do I spend my next 6-12 months in marketing? How do I pay for my operations? You need to utilize things like maybe business credit and business credit cards. Maybe you want to bring an investor on board. You have a 401k plan, whatever. But you can't run this business anymore without money and without doing it over a period of time, right? And always make aware that you are not spending money in this business. What you're doing is you're deploying capital into a system that returns you multiple when you just play it right and long enough. And this is what most people don't do. They try like on a small sample size to get something done, right? I was talking with Harald the other day, right? Like he's one of our autopilot partners, right? And he's in Germany. He's running the business from Germany. He's here on this call right now, and I don't know what time it is over there, but it's late at night, right? So, and Harald, and hopefully he's taking care of his elderly parents that have like medical conditions and all that, and he is taking the time in that, and he invested and he kept going, and he was like, the first 1 to 3 months were really tough from him, but then he made right choices. He kept the business liquid. He hired somebody that really could help him out, and then suddenly, after like 3 months of work where we didn't get anything together, he brings one deal with over $350,000 profit approximately in there. And how would that change your life? This is what I mean. Like, what he really did is he did a huge bet on himself in figuring it out. He deployed money into marketing. He kept it rolling with all the issues. He was knowing, oh my God, now I have it running. I have too many leads. I need help. So he hired help. He kept it rolling. He pushed forward. He was asking the smart questions, right? And then suddenly there comes this one thing, because he did like a good job with market selection, with marketing and all that. There's this one thing that changes the entire equation of what he's doing, if that makes sense, right? And this is how you really need to think. You really need to think about, like, when I get engaged in land investing right now, and I really want to build a business that pays me multiple 6 figures a year, then you need to also have a big plan, because the play that you spend $2,000 on like 5,000 mailers and make $400,000 on that, it's not real anymore. Will there be some examples where that happens? Yes. When enough people try it, the statistics will say it could happen. But when you want to have it reliably, just like change the game in favor of your odds, if that makes sense, right? And when you really want to build a business in this market, you really need to do more, right? And we talked about that, right? And it's all this different pieces that you really need to nail out, right? And I forgot one thing here, but I'm gonna add it verbally. But that's what's differentiating all the real operators in this space from everyone else in 2026 is that they have a functioning CRM system that's working every lead, right? And it's working those leads maybe even with conversational AI that qualifies that. It has nurture sequences built out. Once a lead goes in there, it's nurtured for forever until that lead says like, hey, I don't want to talk to anyone anymore. I hate you, right? Or until they are just like not the owner of the property anymore. When you work, like create also like really a good multi-channel lead generation process. Doing one thing for a small or short period of time is not as good as doing many things for a longer period of time, right? Like, how do you get more successful in the gym, right? Like when I want to say, I want to look like Arnold Schwarzenegger in his best days, right? Like what will bring me to success? To go to the gym like once in a month, or to go to the gym like twice a day, take care of my nutrition, take care of my mental health, take care of enough sleep and all that, right? Probably the second pass will bring me there. The first pass, when I do it long enough, maybe too, right? But and I have a good like metabolism or whatever, but probably you will not, right? So have like consistent multi-channel lead generation. And then also have a really good seller call script. And how do I mean that? How I see a lot of people that come back to me and say like, hey, Robin, all my sellers want market value. And I say, I don't believe that. And why do I do that? Because they don't do a proper qualification. The only thing they ask us in a qualification call is like, hey, yeah, you're interested in selling? Yeah, tell me a little bit who you are. Okay. Hi. What price do you have in mind? 500,000. Hang up the phone, never talk to them again. Done. A real qualification call is about building rapport, is about building trust, is about also discovering motive. And we talked about that earlier. You have price, certainty, and timeline when you have this different exit strategies, right? So you want to learn in your qualification call was which ones of your exit strategies could you potentially help here, if that makes sense. And guys, industry conversion standards are from 100 people that say, send me an offer, is 1 to 3%. That also means that 97 to 99 people will say no to you. It's for you to really find out who are the people I really can work with. And, you know, when you do a good qualification, and the reality is of this 97 people, probably 50 or 60 want market value, but there are still 40 or 50 that are willing to do a deal under the right conditions. And in the qualification call, you want to figure out what are the right conditions. What is that what gets them moving? So, and in a closing call, you want to then present your different exit strategies in a way that it fits into the seller's universe, if that makes sense, right? That you present the different options in a way to them that it really solves a problem for them to have a likability. And then suddenly you have a process around talking to sellers because you have exit strategies and you have like a framework, what you want to ask them. Another really crucial piece in this is comps. And I feel always I don't talk about that enough because the reality is like, you know, we have a lot of people that submit deals to us and then I always come back like, hey, Robin, you declined like 10 of my 10 deals that I sent to you. And I tell you why that is. Because the thesis was that you went in the deal, what it's worth is when you don't know how to run your numbers is most of the time bad. And we are seeing right now a drastic increase over the last 3 years of like deals that are just too high under contract that you can do anything with them. So when you really make offers, you want to make offers where you make money. So you need to know what is it worth. And if you don't know, ask our comps team. They have comped over 30,000 properties. You can just go to our website, portal.thelandpilot.com, do your deal there, and you get all the pricing, everything back with like the 6 exit strategies as pricing. But when you don't run that well, and you contract, of course, like when you have $100,000 property, you offer 95, you probably get it under contract because you're close enough to market value. And then you try to sell it because you think it's worth $150,000, but nobody will make a bite. That's not a disposition problem. That's a problem that you had early in the process with comping. So make sure that you really price your stuff right. Before you turn anything into dispositions, before you market anything, get third-party feedback if you are not sure about like, what is my property actually worth, if that makes sense. So, because this is where your disposition starts. When you didn't do a good job with your seller, locking him in at the right price with the right anticipation what your property is worth, you will never ever make money, right? And when you do all these 5 things, good market selection, have a good CRM, good seller calls, multi-channel lead generation, all that, guess what? The rest of the game is pretty easy. Why? No matter if you sell by yourself, no matter if you sell with real estate agent, no matter if you do wholesale or if you need money, first of all, when your deal is consistently priced right, when you do that right, you will always find money for that deal because you can be confident about it. When you do double closes, you will sell it in the right amount of time because you are not contracted too high and you can offer it on actual market value or below. You will find realtors moving that stuff for you because they do it. And when you list it by yourself, you will get inquiries because when you're listed with the right asset for the right price in the right market, the people will buy it. And most of the time in the land space, what I'm seeing is, and this is why stuff is sitting on Zillow sometimes with the Zillow experience, and we don't have any cameras on other than Jennifer and Harald. Thank you so much. And Musaf, of course. So I can't see like, hey, who is in that space? But like, hey, we have all been in this situation where we had a property and sitting it in the market for forever, and it's almost every time a pricing issue. You just need to lower the price long enough until you find somebody that says, yes, that's the right price for me for this asset. That's a real lever you can pull, and this is how you need to negotiate. Yeah. So I think the gold in our market right now is really to have a streamlined, data-driven acquisition approach that consistently produces leads. This is what you really need to build in this business. And then like all the rest on the disposition side comes from itself, more or less, right? And when you say, oh my God, Robin, that's really a lot, and you're not part of our autopilot program, I'm going to just tell you what we do, right? In our autopilot program, we do this for partners, right? We've built a complete operating system, and we're not teaching a course, right? We are building and running your land business alongside you, right? We do the market selection, we pull the data, we skip trace it, we organize this multi-channel outreach with mail, call, texts, for 6 months. We built you a complete CRM with all the nurture sequences that has a built-in conversational AI, right? And it just like handles leads 24/7. We comp every deal for you. We underwrite every deal for you. We fund it, we market it, we sell it, we do the transactional coordination, and we help you to get the sales done in the right way. And when you're intrigued by that, I just need to tell you, this is not for everyone, right? It requires a real commitment, but we have also profit guarantees and bills to protect your investment. And you need a certain budget because we talk about omni-channel marketing, right? So when you have $7,000 a month, more a month that you can deploy into marketing and you're ready to commit this, book a call with us. Musaf can drop a link here in the chat. And guys, I just wanted to say thank you. I hope this like little market update helped a little bit, and got you a little bit an insight of how I think about this. And I'm really well connected in the land world. I listen to a lot of stuff, have a lot of meetings around this, and yeah, I hope that you can take some of this into your next couple of months into your journey. And I open it up for Q&A here. There were some questions in the chat. Let me see, what do we got here? Mark was asking, how do you know if the market has been saturated with investors? There is certain tools that can find that out, Mark. But in the very end, what does saturated with investors even mean? You're muted. Can you unmute, Mark?
Response rates. If you're not getting the response, you're doing a mailing. And are we not mailing often enough? Or is our message bad? Or are we in a saturated market? I think those are three areas that I'm looking at.
The first question I would ask is, are you just mailing?
That is the initial, yes, that's primarily it.
Okay, then how often are you mailing? It's all about touch points. So when you break it down, Mark, when you break it down, Mark, there's, depending on what source you asked, 28 to 30 million land properties in the US. There's 18 to 19 million people owning that. And then there's a whole shit of land investors. And they all like get taught to look kind of in the same areas, and like half of the areas you anyway don't want to do deals, right? So maybe we lose already 50% of them with these two criterias, right? Because they're, I don't know, somewhere where the prices are super low or whatever. So now we have like this tens of thousands of people trying to get the attention from landowners on a data set that is maybe 8-9 million people that own 15 million properties. Let's go with this working thesis. Who will they answer to? Who has the higher chance to reach and come through? Is it you sending one letter, or is it Jennifer texting them, calling them, and sending a letter, and maybe doing some advertising in this? And this is what I mean. It's not that one thing that brings you anymore. That brings you anywhere, right? It's, you need to do different things to come through. There's a reason why the biggest corporations in the world are paying millions of dollars for a Super Bowl commercial thing, that more people see it, right? And they do that frequently and more often so that they get more recognition, to get more attention, right? This is how all the social media works. So when you do marketing these days, you just need to do more.
What about a milestone? Is there any milestones that you need to meet in order, or response rates? So
it depends. Do you do neutral letters? Do you do blind offers? What is the asset class you're targeting? This is like a really relative questions. And like, I think when you do neutral, a good idea is that no matter what you do, out of 100 hand raises, you will write 1 to 3 contracts. This is like where like I would be. I know you're working with Glenn, right?
Yeah, but if we're not getting hand raises.
So you guys are doing a blind offer strategy. So, and now what you do is you send like to 5,000 people or whatever. I met Glenn this week. I think you sent 5, 6, 7,000 letters, and you put a range on there. So what you do is you send a letter and tell them already what they'll get. What that means is much less people will reach out, because first of all, these people need to raise a letter hard. Right, they need to open that letter, like when it comes to them, right? They get it, and then they need to open it, right? Hard. Then they need to take the phone, call you. that can happen probably in a couple of months, because what they need to do before, they need to like the numbers they see on the paper. What you do with a blind offer strategy, you disqualify all the tire kickers before, but therefore you need to do more that you come through to the right ones. And like with blind offers, you just have two things that happen. You will get a bunch of phone calls from people and responses from people that say, F you, you're an idiot, I hate you, I'm going to kill you and your family and everyone you know.
Yeah,
and,
yeah.
You know, like,
we're off forever.
So, yeah, and that's 80%. But then there's 20% that reach out and want to sign a contract or just negotiate a little bit. Right? And how many touches, how many this? I think like I'm in a couple of masterminds, and I don't know, like what I hear, you need to have an average 8 to 10 touches on a client before you sign a contract. And I think that number will more go up because people get more skeptical. So that means you as a company, in that moment where you get engaged in a two-way conversation with the seller, need to have a top-notch process where they get a lot of touch points with you, right? Like our autopilot clients, for example, like, you know, there's call caller, then it goes to the conversational AI. That's already 2 touch points in the first 10 minutes. There's 2 people talking to that person, right? Or texting, and then it goes to the conversational AI. Then when the AI hangs up, there gets automatically a text message out with saying, hey, my name is Jennifer. I'm like, I will call you from this number. You just like talk with one of my agents. I really want to talk with you about that property. So it's a third touch point. And then Jennifer calls in the next 15 minutes. Right? So now you have 4 touch points. What would the average land investor have done? He would have gotten the lead from his texting campaign, calls him, tries to call him in 3 days, tries to doesn't get them on the phone anymore, doesn't have any kind of follow-up process. You just need to do more, Mark, to get the attention of your seller and stay in touch with him. You need to be quick, right? Also, depending on the lead source. Like ladders are a little bit more forgiving, but still you can't let stuff sitting around anymore for hours and days. You need to be really quick to get a two-way conversation rolling. And you know, all these little touches in between, like, hey, when you need to do some more research on a property, just shoot the seller a text. Hey, this Mark, hey, I'm just like digging a little bit on your property. Can I give you a call tomorrow? I wanted to call you today. Just like, you know, be a reliable partner, be open in communication, and keep the conversations going. Does that make sense? So this is really, really important. So then you ask also, what is the difference between Terra is not digital records. Teradata is like a boutique service that sources leads for you and does skip tracing and all that. They have other data sources than Land Portal and Land Insights. Land Insights and Land Portal, like, it's a preference thing, it's a pricing thing. I would just check out both softwares and see what do I like more. I think the initial data they've underlying it is almost the same. The skip tracing differs from who they are doing this with. I like both of them, and they both have their strengths and weaknesses. Good. Any other questions, guys? Okay. So I just want to encourage you, right? Take the right action steps in the current market. Like get on with the right things, do the right stuff, do more, invest in yourself, invest in your business, believe in yourself, and then there's still great success happening in land. And with that said, I'm going to close it out for today if there are no more questions, and I'm going to see everyone soon.
One quick question.
Harald, go ahead.
What is your approach for a guy who says, okay, I have a hunting property, I'm willing to sell, but I want to keep the right to hunt in the future as well? Is that possible?
No. Yeah, I mean, yeah, he can, as long this is what you want to write and put in writing. If this is a hunting property, right? He can, but you can just like put in your contract he can hunt in the time while you own the property. What your buyer does with it, you can guarantee for that, right? You know what I mean? That's what it is. It's like, yeah, I can guarantee you hunting rights as long as we are owning the property. You probably don't want to tell him that you're going to sell it in the next 3-4 months.
It's exactly the thing. So he will he will feel to be fooled after recognizing that I sold it a couple of months ago in the future.
Yeah, but that's what it is. So what you would do is like you would bring a hunting lease with him in place, right? Like that he's able and can hunt on the property. But in the very end, you know, like you want to make sure that it's just in the duration while you're owning the property. Does that make sense?
Yeah, good. Thank you.
I mean, he can't get a lifelong hunting right. Like, how do you want to resell that? Would you buy a property where a third party has a lifelong hunting right? No, that's not doable, right?
Dangerous as well. If the new owner hunts as well and sees you in the middle of the night there.
And when you have the lease in place, you can tell it, disclose it to the new owner and say, we have a hunting lease. There's somebody actively hunting, right? That you know, you can always give it to a buyer, and the buyer can decide when you have a lease in place for that owner, right? Like, hey, and this is what I would tell the owner: yeah, we buy it from you, and you get a lease for the amount of time I own the property to hunt for free, right? I don't, you know, as long as I own it, and you don't bring up the option that you resell it, and there's always stuff in life happening, if that makes sense, right? So yeah, dude, like this is how I would do that. You know, like in the very end, like, you know, where are all the benefits for him there, right? So Jennifer said, what is the standard in that hunting community, and did the former owner have that right? What do you mean by that? Musab, can you unmute Jennifer?
I was just curious if he was asking for that privilege because he gave that privilege to the person he bought the land from.
Oh yeah, that could be a good thing. Yeah, maybe he had that privilege given to somebody before him. Right? That could be something like, you know, this is what you all want to bring up, right? By the way, something I've never unheard of for me before, that something like that happened, right? So we learn something every day and any day. But yeah, that's a that's a good thing to know. You know, it's like a little bit what he's doing here, Harald, is, oh, you know, you can buy my house, but I'm gonna stay in there for the rest of my life. You know, like there's always like certain forms and terms and conditions you want to bring in place, right? This is how I would frame that too. I would like, hey, listen, we can do that. We would bring a hunting lease in place, right? And that regulates everything around that, what you can do and what you can't do. And then as long as I own the property, I would be good with that you can hunt there for free. But it's you and only you, if that makes sense, right? Liability if someone gets shot on accident. Yeah, if Frank brought that up, that could be that you know, like in the very end, this is something you need to be aware of. Yeah, probably you want to have insurance on that. I'm not too much in the hunting space, right? So there's a lot. Probably I would check that with an attorney before we do something like that, right? Hara, like with your hunting guy, right? Frank was like liability if someone gets shot on accident. Yeah, that's like probably a big liability, right? So yeah, you want to do that. So is there more or less land buyers now than 6 months ago? I think it depends on the asset type. I think, you know, depending on what kind of deals you're doing, there in general, in real estate is still slow. There's in general less buyers, but like in times like this, when you sell the right thing, right, then they buy it. Does that make sense? So it's not so much about the quantity, it's like are the quality of buyers there for that what I'm selling. Because, you know, like when you try to sell like the famous thing when you try to sell like fridges to Eskimos, right? That's probably not as successful as selling radiators to them, right? So, and you always want to be more in the radiator situation than in the fridge Eskimo situation. Does that make sense? But also about the bifurcations of land sales of wholesale versus retail. I don't even know what bifurcations mean there. Can you write that in plain English or ask me that in plain English? Can you unmute him real quick, Musaf, Mark?
Okay, basically, I'm talking that things are sold on unqualified, basically at a wholesale. Family, interfamily sales, all that. Investors too are sort of a wholesale type of versus a listing, which is a retail. MLS is a retail, and
Yeah,
there's a
I
certain.
understand that, but what do you mean with these questions? With this question, what do you want to get out of this, out of my answer?
How do you price when you have certain volume that's going as a wholesale versus a retail? Are you taking that in consideration, or are you just
Yeah, of
running
course,
it?
because in a wholesale situation, you work against a timeline. How do you work the most efficient against a timeline is that you just have a lower price you list it for. Because everyone likes to do deals, right? Like likes to get a steal. That's why Costco is always full, because people think it's so cheap there, right? Like so, and like when you have a good opportunity where people like have the feeling to buy something. So this is the crux in wholesale, right? Like it's like really like you pay more money to get it under contract, but you also can take less money because you're working on time. And this is why it's so important that wholesale is not your only resale strategy, right? Because you squeeze the margins too much. Good. Okay, guys, that was it. 2 o'clock. Thank you for chiming in. I see everyone next week. I have somebody great next week. I don't want to disclose who it is yet, but we will soon. Have a great day, guys. Bye-bye.